Hey traders, Kill here. I want to share with you a quick trading idea on the euro dollar. And today was a very nice day in the market. I just went through some of my numbers from April, and April was one of the slowest trading months that I've had. I only took about 9 trades in April, or had 9 trades that I've fully completed. I have a few that are still on the board right now. So it was delightful to see some movement in the market today. And today was a trend trading opportunity, especially if you're an intraday trader. So someone that operates on the lower time frames. And I say that because we had a few different pairs that had just passed key decision points. And what I call a decision point in the market is an area where, well, we're going to have a decision to make where you guys know I like this if then thought process, trying to be robotic in our trading. It's a point in the market where if price holds at this level, then we can look for this type of trade. If price violates this level, then we can look for that type of trade. And these pairs had violated some previous levels of structure, some major levels of structure. And essentially, we had clear sailing down to the next level of structure. And one of the areas that we were looking at this morning on the euro dollar was the $1.20 level. You see, we had this green box drawn in here from a past video. We dialed down on that and we got more specific and really ID'd the level that we thought price would go to. The $1.20 psychological level was the level on the radar. And you can see we traveled right down there. And as far as trading purposes go, again, nothing you can do or nothing I can do on the higher time frame. But this is where we go down to the lower time frame, say like your 5-minute chart, your 15, or my personal favorite, the range bar charts, going down to a 5 or an 8 range, and really try to catch some of the smaller moves in the market, the smaller pullbacks, which allow you to catch those larger extensions. But here's what I'm looking at. And this may or may not be valid still by the time you see this video. But if you know the rules, then you'll be able to see if it is or not. But you can see we came down to the $1.20 even handle and we started to see some buying pressure. You can tell by this wick right here. Again, price action put in a pretty aggressive bearish move down here. We came down to that $1.20 level and we started to see some buying pressure enter the market. You could tell by the wick on this candle, right? The price had traded down here and then boom, we got beat back up and we're currently putting in a retest of structure right here. If this level were to hold, if level were to break, 119.50 is the next level I'd be looking for. But if this level were to hold, we would expect to see some type of relief, some type of pullback. And although our initial kill zone is here, right? Let's say if we were to get above that kill zone, get beyond that kill zone, we're going to set ourselves up with an advanced pattern formation. This is going to be called the cipher pattern. The cipher pattern is going to look something like this, right? Draw it out for you guys in a little bit. Now, for you guys using TradingView, if you're going to use the kind of the tool over here, make sure you use the cipher tool, not the XABCD tool. Big differences. I'll show you. Watch. If we look at the XABCD tool, right, and we just draw this potential cipher out, you're going to see that it says you have a Fibonacci retracement down here of 1748, right, which is going to be false. And I'll show you why, right? If we use the Fibonacci, and it's false the way I draw my fibs on. The reason it's different is because when they originally drew out the tool, it measures its fibs differently than what I do. If we take the fib from our swing high to swing low here, you're going to see that we're at a 127 right here. We're at a 1414 right there. So it's a little bit different. So if you're going to use the tool, right, I like to do it manually. Just use your use your Fibonacci's and go through the process one step at a time. But if you're going to use the tool here, make sure you use the cipher tool. TradingView made this specifically for the way that we trade this pattern formation. But X to A, A to B. Your B to C is right down here. You can see 1444 lining up right with our Fibonacci, right? And then we're looking for a D completion right up here at the 786 for a potential short move. And for you guys that are familiar with how we identify structure and how we identify kill zones, you're probably asking yourself the question, well, Keel, why, if I can find my thing, why would I want to trade short when price action would have violated previous structure highs? Well, one, it's a pattern formation. At least my rules for pattern formations are I trade every darn one, right? For me, it's a numbers game. It's not which ones I think are going to work out. It's not which ones that look good. We actually had a very good conversation in the live room this morning about being one step behind the market. So a trader was asking again. He said, "Akil, today we're seeing a lot of trending markets. Why would we want to take any pattern formation?" We had a nice bear cipher on the dollar Canada right before the GDP news came out, which was pretty successful. Actually made a few extra pips by accident on there, but I won't tell if you won't tell. But anyway, so the question was, why would you why would you take advanced pattern formations? If most advanced pattern formations form during consolidated markets, why would you take advanced pattern formation during trending markets? And it took us down the whole conversation of the road of that we don't know that the market is trending until the market is trending. We don't know that the market is in consolidation until it is consolidating. So if we try to wait until something happens to make our judgment, as far as that specific type of trading strategy goes, we're always going to be one step behind. But one reason that, so you would think that price action above here, right? This does put us in consolidation, a break and a close would, but even a move beyond this previous level of structure, you would think that, all right, our previous outside return has been violated. Why would I want to take this trade? And the psychology behind it is very similar to the butterfly pattern, where it's an exhaustion pattern, right? You would see a massive amount of buying pressure, right, to push price all the way up past this level, right? All the way past this 121.41 level, right? When you get above here, right, you think this is a level where the buyers are now looking to sell, right? You also have a place where kind of the people that are late to the party, they're going to get skunked out with very, very newbie-like stop losses at this area. So it's a perfect level where the market gets exhausted and we start to see some relief in the opposite direction. Does that mean a continuation all the way down? No, it doesn't. But as an advanced pattern formation trader, remember, this is a counter trend. Although you can use them in trend continuation scenarios, traditionally, advanced pattern formations are counter trend trades. You're only looking for a short pullback. You're trying to get some profit and you're going to get out the market. So put this on the radar. Again, keep an eye on this C leg. Make sure it's not violated. And if it does, then obviously you don't want to be in the trade. But this is something that was on my radar for today's Trading Edge video. And I just wanted to share it with you guys as well.